Is the upcoming election about to shake up the housing market?
We've gathered insights from leading voices like Ken McElroy to understand the implications.
And here's the best part. You'll get all the key takeaways distilled into minutes.
Stay tuned to learn how Trump's tax cuts could influence interest rates and home prices.
Welcome to Financial Insights in Minutes, where we break down the most pressing financial discussions.
Next, we'll discover the critical role of affordable housing policies in Texas under Harris's potential leadership.
But first, let's explore how the election could change the way we approach real estate investments. In today's discussion, we're exploring how the upcoming election could drastically change the housing market.
Absolutely. With such a close race, the implications for real estate investors could be monumental.
So what do we see as the core thesis here?
Trump aims to stimulate the economy and real estate sector with lower interest rates, while Harris prioritizes affordable housing.
What does Trump's plan mean for interest rates?
Lower rates typically increase home prices by making borrowing cheaper.
And what about Harris's policies on affordable housing?
She aims to create more rental homes and reduce rent prices, though implementation is key.
Could inflation benefit real estate investors?
Yes, if property values rise with inflation, it benefits existing homeowners.
How might taxes change under these candidates?
Trump likely keeps more incentives for investors, while Harris may raise corporate taxes.
Could we see a resurgence in generational housing?
Definitely. Rising costs may push families to live together longer.
What are the predictions for housing supply if Harris wins?
She claims she will build 3 million homes, but the execution remains uncertain.
And what about Trump's potential economic influence?
His focus could lead to more inflation and increased asset prices.
Wrapping things up, what should investors focus on as the election approaches?
Adaptability is key. Understand which policies align with your investment strategies.
Today, we're unraveling the whirlwind that is China's economy. Buckle up.
Indeed. Despite facing colossal setbacks, there's been an unexpected stock market rally. What's happening?
What's the crux of Graham's analysis regarding China's economic state?
He emphasizes that despite major challenges, the government is unleashing a massive stimulus that's already showing short-term positive effects.
Interesting, but one has to wonder, how long can this last?
Exactly. The sustainability of this rally is under serious scrutiny.
Let's delve into the housing crisis. Didn't China invest heavily in real estate?
Absolutely. However, with the market bloated and unsustainable, it's all come crashing down.
What's the situation with youth employment in China?
It's alarming. The youth unemployment rate is soaring, with many graduates struggling to find viable work.
And how is deflation affecting consumer behavior?
Deflation leads to decreased spending as people wait for prices to fall further. It's a dangerous cycle.
China is attempting a big reset. What's on the horizon?
They've proposed massive fiscal interventions to stabilize the economy, but questions about long-term viability remain.
The stock market has rallied sharply. What's fueling this sudden uptick?
Optimism around government stimulus measures has led to speculative trading, but it's a fragile situation.
Graham has some predictions for the market. What are they?
He suggests current growth is precarious, heavily reliant on future stimulus success.
It sounds like a high-stakes game.
Definitely. Many are watching warily as conditions develop.
To wrap this up, what's the takeaway here?
Exercise caution. While the short-term gains look positive, the broader challenges still loom large.
Definitely a balance of risk and opportunity moving forward.
Exactly. Keeping an eye on developments is crucial for savvy investors.
Today, we're debunking the so-called Great Melt-Up, a term that's got everyone buzzing.
Absolutely. But are we witnessing a genuine bull run or just a case of wishful thinking?
So what's the real story behind this so-called melt-up?
It's primarily smoke and mirrors, hiding serious economic issues like swelling debt and a crumbling job market.
Interesting, but what makes debt such a pressing concern?
The U.S. national debt alone is staggering and unsustainable compared to our GDP.
The current market seems to have everyone optimistic. Do you think this is justified?
Not at all. This kind of blind faith can lead to recklessness.
How concerning are the projections for national debt?
We're talking about never-before-seen levels of spending and debt that simply aren't sustainable.
What should we watch for in terms of recession indicators?
Things like tighter credit conditions and rising delinquencies, those are huge red flags.
It seems like the emotions are driving the market rather than logic. Thoughts?
Definitely, emotional trading often leads to panic selling when the tide turns.
As we move into uncertain times, how should viewers prepare?
They need to focus on savings and intelligent investments. Avoid being swept up in the hype.
What's the outlook for the housing market in this shaky environment?
It may hold up temporarily, but underlying risks could lead to unforeseen adjustments.
So looking ahead, how bleak do things look?
There's a significant chance of contraction if current trends continue.
Ultimately, what's the key takeaway from all this?
It's about understanding the broader economic landscape. Prepare for shifts, but seek opportunities.
Balance is essential. Caution intertwined with thoughtful risk might be the best approach.
Absolutely. Stay informed and strategize effectively to create stability in your investments.
In tonight's episode, we're diving into the colorful world of homeowners associations with Christina Smallhorn. Welcome.
Thanks for having me, Todd. It's a hot topic in real estate.
So what's at the heart of the HOA debate?
It boils down to control. They can dictate everything from paint colors to pet ownership.
Can you take us through the origins of HOAs?
Absolutely. They initially aimed to keep community rules, but have evolved into something else.
What are some of the biggest complaints you hear?
People often feel blindsided by fines and rules they didn't know existed.
How do management companies play into this?
They often lack accountability and sometimes prioritize profit over fairness.
What legislative changes are on the horizon?
Some states are recognizing the need for reform and pushing for better guidelines.
Can you share any memorable stories?
Absolutely. I've seen residents go to court over trivial HOA disputes.
Where do you see the future of HOAs heading?
I predict an uptick in legislative actions to protect homeowners.
Will we see a change in how buyers approach HOAs?
Definitely, people are becoming more aware of what they're signing up for.
In summary, what should we all take away from this?
Stay informed and actively participate. It's your community.
Today on Bigger Pockets, we're delving into the ins and outs of refinancing and HELOCs with the knowledgeable Jay Ridge.
Thanks, Dave. Excited to share how investors can make the most of the current market conditions.
What's the current situation for refinancing today?
Rates have varied, but with recent drops, now could be advantageous for those considering cash-out refinances.
Interesting. So for investors, what should they watch for?
The key is to do the math and understand their individual investment strategies.
What trends are we seeing in mortgage rates?
Rates have been bouncing back up, but they are still lower than the previous highs.
How does a cash-out refinance work for investors?
It lets you leverage your equity to fund new investments or consolidate debt.
What are the benefits of a HELOC compared to a cash-out refinance?
HELOCs offer flexible borrowing, as you're only paying interest on what you utilize.
What's your take on where rates are headed?
I expect to see some rate improvements over the next year if the economy remains stable.
When should investors consider refinancing?
They should weigh the long-term savings against the costs to determine if it's worth it.
What's next for the interest rates?
With upcoming Fed meetings, we might see a slight reduction in rates, maybe a quarter point.
Should investors remain proactive during these fluctuations?
Absolutely. The right refinance or HELOC can open doors for new opportunities.
So what's the key takeaway for our viewers?
Investors should always do their due diligence and explore all options available to maximize their equity.
Great advice, Jay. Keeping our eyes on market changes is crucial. It seems that the potential impact of the election is a hot topic among our experts, especially Ken McElroy, who argues that Trump's tax cuts could boost the housing market.
Absolutely. But Mitch warns that despite apparent market strength, critical indicators of a recession loom large.
And while Jay Ridge emphasized refinancing strategies, Christina Smallhorn highlighted the good and bad sides of homeowners associations, showing us the diverse factors at play.
Right. There's a lot happening. Interconnectedness indeed defines today's market landscape.
So viewers, if you found these insights valuable, do us a favor and hit that like button.
And don't forget to subscribe for more financial updates and expert analysis. You won't want to miss what's coming next.
Thanks for joining us today, and make sure to check out more content from our channel. We have more great discussions lined up.